Welcome to the Banker Lamp. Please enjoy the video.
In this video, I will compare QuickBooks expense versus bill. We'll dive into the core distinctions between these two crucial accounting methods, helping you decide which one to use for various transactions. Understanding these differences is key to maintaining accurate financial records and generating reliable reports. By the end, you'll confidently choose the right option for your business's financial health, ensuring every transaction is recorded correctly. When you record an expense in QuickBooks, you're indicating that a payment has been made right away. Think of it as using your debit card, writing a check that clears immediately, or paying with cash. This method directly impacts your bank or cash account, showing an immediate outflow of funds. It's perfect for those straightforward, one-off purchases where no future payment is due. Conversely, recording a bill in QuickBooks means you've received an invoice for goods or services, but payment will occur at a later date. This action creates an accounts payable liability on your balance sheet, showing money your business owes. It's essential for managing your cash flow, tracking due dates, and maintaining good relationships with your vendors by ensuring timely payments. So, which is better? It truly depends on your payment timing. If you pay immediately, use an expense. If you receive an invoice and plan to pay later, use a bill. Both methods accurately record your spending, but they affect different accounts and provide distinct insights into your cash flow and liabilities. Making the correct choice ensures your financial statements are always precise.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.